We have been reliably informed that almost 85% of all Botswana are currently uninsured. This has been attributed to a number of reasons. The fact that Botswana do not know enough about products that can secure their livelihoods and assets. The relative newness of the insurance industry in the country has led to lapses in professionalism that have resulted in a lot of product pushing as opposed to agents that offer more needs-based solutions to their clients. Also, many people do not trust insurance providers to pay out after a major life event. Whether this is a warranted mistrust or the result of past misunderstandings due to the lack of education on such products is yet to be determined. With the industry as it stands, how then are we to best assess which products will serve us well in our financial planning mix and which will just drain us of money that could be used to generate wealth elsewhere? We turn to financial advisor Nelson Letsweni for guidance on this matter.
You have to be very careful about certain policies which basically are just, basically it's like overprotection. Let's think about a funeral policy, for example. If, people in a family, we are covering, let's say, our mother, and there's 5 of us, we should actually communicate first and make sure that before somebody covers, they've spoken to others. Because if I put my mother on that policy and you do, and our brother does, and the sister does, and everybody does, hey, she can only die once. And the insurance company is only gonna pay once, which means everybody else who paid your insurance, your premiums have gone into the money pit, basically. So you need to make sure that, you are not trying to use it as a savings system. You're gonna lose money if you do it like that. So in a family, people need to talk, if there's, especially with funeral policies, those are the ones that you need to be very careful about. Any other policy, which is a savings policy, for example, you can be able to get that money because there's a maturity time at the end of which you'll be able to get a certain amount that you shall have invested.
In the instance of funeral cover, as you have mentioned, would the same apply if the family members were to get their cover from different insurance providers? Or does that only apply if they get it from the same company, that the company would not pay out for the same person?
They would pay out, but you still have to ask yourself, why would you want to do that? I mean, what size of a funeral do you want? Okay, so if one person has covered the person, they can only die once, they can only be buried once. You are better off, because you see, that is money that is fixed. They say we're going to give you 20,000, regardless of how much you contribute. So if you spend the next 20 years contributing, you're only going to get the fixed amount, the 20,000 they said they're going to give you. So you are better off, basically, if one person has covered, the parent, then the rest of you save the money elsewhere. Either take a different policy, an endowment policy that will actually grow, so that if you are contributing for a funeral cover for 20 years, actually, you will be able to get more than the 20,000. So the limitation is that, with funeral covers, they already tell you how much you're gonna get upon the death of the insured person. So it's not necessary. Even if you do different companies, it may be a waste of money if you are covering one person, all of you as a family.
Is there a way to assess whether a policy is for you or not? Is it dependent on life stage, on assets? Which things must somebody take into consideration when considering what is beneficial to them as opposed to just being a drain?
Your insurance agent should be able to do a risk assessment with you. So the risk assessment is to look at your entire life and say, this person, as you are, these are your vulnerabilities. Should you die, here's what might happen. You might need money here or there or there. And so based on that, we are able to say, what is the age of your children? And if you died now, how much money would you need? And obviously, as you grow and your children grow and your insurance needs go down, then you can be in a position to say, I don't really need this cover anymore, and you can get to the point where you cancel. But still, it might be something that is useful when we do estate planning, where if your estate is to the levels that would be taxed, you know, there are certain estates when they are too low, they don't get taxed. But if your estate is going to get taxed, then an insurance policy might be the one that's going to be cashed to pay those estate taxes instead of having to sell some of your assets to be able to pay that. So there's many uses of insurance, and that's why it's very important to do a risk assessment, to get your financial planner to sit down with you and say, here are my risks now, but 5 years from now, your risks might not be the same. So it's not like I have this policy I've been paying for 5 years, and so you're holding on to it even though it's no longer useful to you. So there's times when you could say, it's no longer useful, my children are grown up, I don't have any more these kind of risk, or maybe shift it to a different risk.
Other than funeral cover, are there other policies that you find are prone to abuse and add to this overprotection that you've mentioned?
In insurance, it's a funny thing because when you don't have it and you need it, you can't get it. Okay, so it's one of those you need to get before you need it. So the proper risk assessment is very, very important in the very beginning. So don't take a policy just because the insurance agent is here telling me, you know, stories. You have to be able to do they have to be able to do proper risk assessment with you, and you be able to make sure that the ones that you are taking are important for you. Overprotection may work. I mean, we're talking about life cover or long-term right here, but think about your car, which is the short-term insurance policies. If you insure your car for 150, but it's actually 50, it's worth 50,000, the insurance company is only going to pay what it's worth, which is 50,000. So, but you shall have paid premiums worth 150, which is called overinsurance. So the proper assessment is very, very important before you take the cover of any kind, either life cover or short-term cover.
What is the future of help? It's to help people find the great in themselves. The drive, the passion. Help them find their true potential. Help them stretch. Help them grow. That's why we help people help themselves, help the world, because a little help goes a long, long way. FNB, how can we help you?
Welcome back to the show. We recently sought to unpack what global markets are, with the help of the team crowned Global Finance Magazine's World Best Forex Provider for 2017. Here is a quick recap.
Speaking, global markets means the buying and selling of goods. But in the context of banking, normally when we say global markets, we are referring to departments where there is trading of different sort of products, if you may. For example, trading of fixed income instruments, which would refer to your bonds, your interest rate instruments, stuff like interest rate swaps. Or you can refer to currency trading, which I think a lot of us are familiar with, which is the trading of foreign exchange instruments, buying and selling of currency. We can also talk about, trading of commodities, your hard commodities like gold, silver, platinum, copper, or soft commodities, maize, cocoa, and the like.
At this point, you may now be asking yourself what causes these daily rises and falls in currency values that have been discussed thus far, especially seeing that we have witnessed dramatic tumbles in currencies such as the rand and even the pound in recent times, raising the question, how safe is the Pula from such occurrences? This time, it is teammate Abaile Corrigan who was at hand to assist.
As a starting point, it's imperative that you understand what a currency is or how we quote a currency. It's essentially the unit cost of one currency expressed as another currency. So in the context of Pula Rand, as an example, you would say that one Pula is equivalent to, say, 1.27 in the Rand context. That is essentially what a foreign currency is. Now, once you've understood that, you then begin to realize that there are multitudes of factors that affect currencies as a whole. So when you look at it from a global perspective, there will be macroeconomic factors that impact, and then there will also be microeconomic factors. When you talk about microeconomic factors in the Botswana context, what you're looking at is things like our exports, our imports, interest rates locally, the level of inflation in the country. And when we talk about things like exports and imports, the question then becomes, are you a net importer? Are you an exporter? And what currencies do the goods that you export, what are they denominated in? In the terms of a global perspective, things that will affect that will be issues such as commodity prices. Is the global economy growing? Is it in a recession? What's happening globally? Even from a geopolitical perspective, that will also have an effect on exchange rates. However, if we bring it a little bit closer to home and we talk about the Pula in particular, what affects the Pula? So the Pula, as I'm sure you're well aware, is made up of a crawling peg. And that peg is split into what we call an SDR, right, as well as the Rand. So this is how we're exposed. Previously, as early as 2016, we were 50% exposed to the SDR and 50% exposed to the Rand. With effect from the 1st of January 2017, that shifted. So now we're exposed 55% to the SDR and 45% to the South African Rand. The dominant determinant in terms of where the Pula actually sits is predominantly the South African Rand. So if you look at the relationship between dollar Rand and dollar Pula, you'll actually find an almost exact correlation between the two currency pairs. In terms of the SDR, just to help you understand what that is, those are special drawings, and that's basically made up of our key trading partners. So the SDR is made up of the US dollar, the euro, the Chinese renminbi, the Japanese yen, as well as most recently introduced the Chinese renminbi. That was introduced, if I'm not mistaken, I think it was in October of 2015, right? And then obviously the British pound sterling. Okay, so that's what's made up of that SDR. And to a certain extent, so I think the dollar is the most dominant in that. It's about 40%. The euro comes in at about 30. I think the Chinese renminbi is at about 11, and then the euro and the pound sterling are roughly at about 8%. So that's the composite of what makes up the Pula crawling peg. One of the other developments that happened at the beginning of the year as well was that the peg used to fluctuate about 0.38%. That's subsequently been narrowed down to a range of 0.26%. What makes the currency move from, for example, a level of 1.23 one day to a jump of 1.40 as another example? In Botswana in particular, like I said, we are predominantly exposed to the Rand. So if you begin to understand the factors that impact the Rand, you understand the movements in the Pula a lot better. When you look at the Rand as a whole, it is an emerging market currency, all right? So it is a very volatile currency. It's actually one of the most volatile emerging market currencies. It is impacted 60% by global factors. So for example, the election of a Donald Trump, the event of a Brexit, those sort of things will have a 60% impact on the Rand movements. And then there's the 40% which is affected by local factors. And local factors, as I intimated to you, talks to things like interest rates, talks to political stability in the country. It also talks to things like what is inflation doing, what is unemployment doing, and what is the outlook for a country looking like. And part of the big concern in this market in particular is with Jacob Zuma's firing of Pravin Gordhan, the cabinet reshuffle, the previous Nenegate sagas we often refer to, there is a lot of political instability in the market. And obviously that makes investors, particularly foreign investors, extremely uncomfortable. Now, for a lot of international investors globally, to invest in a country, they need to be investment grade, because this is obviously funds that are coming from international investors, and they need to make sure that their money is safe and secure where it is. So what you find is that all these factors will ultimately impact the value of a currency. As you can imagine, the more riskier we view a currency, the weaker that currency will be compared to, for example, the Pula in this particular instance.
What is the future of help? It's to help people find the great in themselves. The drive, the passion, help them find their true potential, help them stretch, help them grow. That's why we help people help themselves, help the world, because a little help goes a long, long way. FNB, how can we help you?
We often think of financial inclusion as access to loans and credit in the banking sector. But according to our guest, Wabile Mabusa, Chief Executive Officer of the Bankers Association of Botswana, or BAB, financial inclusion is the ability of citizens to have access to effective and affordable financial products and services. And that services should include financial counseling on investments for the translation of money into wealth. Financial inclusion is therefore an enabler and accelerator of job creation, economic growth and development. It is with this in mind that BAB, in partnership with the Botswana Institute of Bankers, BIB, put together Botswana's first ever Banking and Wealth Exposition to be held this November at the Tupo Hall in Gaborone, under the theme, Bridging the Inclusion Gap Through Financial Literacy. Families and business owners will be educated on the skills to generate income and manage irregular cash flows, invest in emerging opportunities, strengthen their resilience to economic downturns, and work their way out of poverty. The Banking and Wealth Expo is also set to bring together regulators and authorities from within the financial services sector, together with other industry players, to facilitate dialogue and meaningful resolutions on policy issues affecting the industry. We visited BAB offices here in Gaborone to speak to CEO Wabile Mabusa more on these issues.
We sponsored a national study on financial inclusion and financial access in 2014. Now, that study gave us quite useful insights into the nature of financial access and financial inclusion in the country, and gave us indications of what needs to be done, what gaps need to be filled. Further to that, the ministry, following on our study, also did a study on which led to the definition of a roadmap called Financial Inclusion Roadmap 2015 to 2021.
What main things really stood out to you from the study that you commissioned as Bankers Association?
To our surprise, banking penetration in terms of access to banking by the public was just 50%. And what that means is that there is a lot that needs to be done to actually improve the level of access of the Botswana public in the banking sector. But much more so, we came to realize that when you look at the broader financial sector, there's actually even much more. For instance, the insurance sector scored just over 30%. But much more telling was the fact that around 20% of the bankable population or the eligible population did not have access to finance or banking. That is, they're financially excluded. And what that means is that there is a good, decent level or number of people within the Botswana population who do not have access to finance or banking.
What does this mean for those who are unbanked? What are the implications for them? What would the benefit of inclusion be for the average Motswana?
It doesn't matter where one lives in Botswana, whether in the rural areas, as we call them, or urban areas. If they are able to transact, they are able to have access to credit, and transact and have access to credit at reasonable cost, then it would mean that they have a much better contribution to the economy. They are able to participate more meaningfully and make a difference to their lives.
With all that in mind, what will you be looking to achieve in the few days that you will have the Banking and Wealth Expo taking place here in Gaborone?
This platform will create unprecedented dialogue that would allow seamless, rich exchange between policymakers, the private sector, and ordinary members of the public. The private sector will be able to make a call on government and tell government what it is that they feel government needs to do or is not doing right. Government, on the other end, will actually articulate its position and put industry or private sector on the back foot to say, this is what you are not doing right, this is what you ought to be doing. The public will be there to say, look, we don't care what you guys in government or private sector do or say, this is actually what we need. And that dialogue will lead to the development of richer policies, richer business practices, the development of better and meaningful products, and actually an interested and participating public.
We applaud BAB and BIB for their efforts towards promoting financial literacy and trust that you, the First Issues viewers, will definitely capitalize on these efforts. With that, however, it is good night from me, Nameto Samankula, and the First Issues team.